Hey everyone, Josh Martinez here with TradersAgency.com and welcome to the video. We have some pretty exciting news. Ross Givens is joining the team. Now he is a very experienced stock trader. So we invited him onto the channel to share his experience, his research, and his knowledge with you. So you're going to see more and more of him. Why is he here? Well, I focus mostly and mainly in the futures market, but I know there's a lot of people that want to learn techniques in the stock market. So enjoy the video and welcome to the team, Ross. Hey everyone, I hope you enjoy this content. Don't forget to click that subscribe button and hit that bell to be notified of upcoming videos.
Hey there, Ross Givens here with Traders Agency, and today I want to walk through one of the most powerful chart patterns there is. In fact, this pattern, although it's fairly rare, can lead to the largest and fastest gains I've seen. I'm talking about stock moves of 30, 50, 100+% in just a short number of days or weeks. Now, the chart pattern is known as the high tight flag. I'm going to walk you through how it works, what you're looking for, and additionally why it works. You know, a lot of people talk about, oh, I trade cup and handles, or I trade this, head and shoulders pattern. I've seen people talk about Batman formation. They don't know why they trade them. I think it's really important to understand why a certain chart pattern works or doesn't work and what exactly you're seeing, because only by knowing what's behind that pattern and the actual activity going on behind the scenes can you really have faith in it and really trust your trade. And only when you really trust your trades and your setups and why you're doing something are you going to be able to hold on for those larger moves to make some big profits. So let's go ahead and break it down for you. I started making this video today because I just entered one of these trades this morning. Now the chart you're seeing right here is Lending Club, ticker symbol LC. Now Lending Club been having some really strong price action here recently. In fact, its relative strength is in the 99th percentile. Now, I use a software called MarketSmith to run through the basic fundamentals, and I'll bring that up on the screen right here. You don't need to understand all this works. Again, this is not my software. It's from Investors Business Daily. It costs around $150 a month or so, but it gives me a couple of things, and one of the main ones is it shows me the key fundamentals down there in the bottom right. You know, when it comes to the underlying fundamentals, I don't care about the book value per share. I don't care about inventory turnover. I don't care what the PE ratio is. I'm looking for one thing and one thing only, and that's growth. I want to see earnings getting bigger. I want to see sales getting bigger. And so this quickly identifies those stocks. So we see the company's been pretty flat the last few quarters, and now it's coming back to life. So the last quarter grew sales by 400%. Earnings went from negative 60 cents a share, so a 60-cent loss, to a 9-cent profit. And look at this strong price action, just surging higher. It's gone from $15 to $30 just a couple of days. Earnings expectation you see here in the top left is again, it's been kind of a dog for a lot of years. But look at that, 2022 finally supposed to turn a profit of around $1.16, which is going to be huge. Anytime you've got a stock, especially a smaller stock, that's been unprofitable for a lot of years and suddenly becomes profitable, you can see really large moves in that stock. And if you don't believe me, go back and look at Tesla 2020, see what can happen when a company finally turns profitable. Now, here is that pattern again. Now, if we scroll back, look, here's a daily chart. Look, this stock has been a dog since 2015. It was a $140 stock, came all the way down here to $4, absolute dog, but it's coming back to life. And I've drawn out on this chart the high tight flag. Now, as you probably assumed, it gets that name because it looks like a high and tight flag. So generally what happens, the stock will make a large move higher, followed by a retracement of less than 25%, a tight little consolidation. And then when it breaks out above this to a new high, that's the trigger to buy. Now, I've drawn out the rules in the chart. Let me bring these up for you so you can see them. And this is what you're looking for with the high tight flag formation. First thing is a move of greater than 100% in under 8 weeks. Now, some texts will tell you you want this thing to be 100 to 120%, but I don't discount them if it moves further. If this thing saw 300 or 500 or 800% move in the last 2 months, I'm not going to ignore this trade. If anything, I'm going to like it that much more. But here's the important part. After that big move, forming the flag pole, which is this right here. See this green line right here? That's the flag pole, the big move higher. And I'll go ahead and measure that one out for you so you can see what I'm talking about. It comes right at, let's see, from this low to the high, which is right at 100%. The up move there the last few weeks. Okay, and really if we take it from back here in May, so look at the last 8 weeks, so it could be a little bit higher than that. It's probably, what, 103, 104. So roughly 100% up move, right? Step 2, the stock then corrects 10 to 25%. The important thing is it does not correct more than 25%. So again, I've got this little drawing tool here on the TradingView platform. If you're not using this, you can just grab a calculator. So the high was 30, it came down to 25. 25 minus 30 divided by 30, what's my percentage? But I'll just draw it out here for you really quick. And we see from the high of this to the pullback to the low there, right at 15%. So that checks the box. So here's why this is important. It is natural when a stock makes a large move higher to then retrace. You're going to take profits, right? If I told you to buy the stock at 15, you check your account a week later, it's at 30, you're probably going to sell some. You're going to take some profits, put some dollars in your pocket. And that's what everyone else does. So that's a natural reaction, these pullbacks on the way up. But when it's a shallow pullback, when you get a huge move, 100+%, the stock is doubled or more, and that only pulls back around 25%, what that tells you is that the market thinks it's going to go even further. Not that many people are selling. The shallower that is, the better. And in this case, 15% is a very, very shallow retracement after such a large move higher. If the market thought it's up, we don't know if it's going to keep going, let's just take the money while we've got it, it would retrace. And you'll often see these things run up and retrace 50, 80, even all that move or more. But if it doesn't, and it holds up here, again, for 3 to 5 week period, that's a strong sign. It shows you not much supply is going to market. Not many people want to sell their shares. They're still holding on to them. These are the diamond hands traders, as the term is around Reddit right now, okay? And then, so here we've got to see this flag formation, and you just take that high, and then your entry is on a new high. You may do 5 or 10 cents above that high, and that would be right in here when it breaks the top of that. And you can see where I bought. I bought 300 shares this morning, right here at $30.15. The high was $29.72, so I got it about a quarter late. I should have had this thing at around $29.85, so I paid about 30 cents more than I should have. But that's what you're looking for now. So it's only been, 4 hours or so. We got a nice little profit going for us. And hopefully this thing continues. Now my stop, as you see, is right here below that last little swing low. If you really wanted to do this properly, probably could have brought all that into your 25.35, but I wanted to trade this one a little bit tighter. So where you place the stop is kind of up to you. But what you really want to do is in these formations, and let me scoot this chart over so I can kind of draw one for you. But normally the stock will kind of come up and then retrace a little, and hopefully it gets tighter and tighter toward the right, like this. So it kind of, forms this pendulum upward. And you want to just put your stop below that last little swing low there. Okay, that's what you're trying to do, is just take out, wherever it swung to last, you shouldn't get back below there, right? The last wave of selling ran out, in this case, right there, okay, and the low of that candle is 26.91. So you see I got to stop at 26.88, just below that. All right, so you just want to put it below the last low of that exhaustion. The last place sellers stopped and buyers came in. All right, so that's the high tight flag. And again, as I mentioned, these can make huge moves because a lot of people are scared of this trade. And it shouldn't surprise you. What are we taught since we're babies? Buy low and sell high. So when a stock just double, what's everyone going? Man, I wish I'd bought that a week ago. I guess I'm late, not buying it now. But that's a mistake, because with shallow retracements, that's showing you the stock still has room to go, that the bulls, the owners of this stock are not selling it, and you could get a second wave. It's large, if not larger, than the one you just saw. I'll show you another example. This is Turtle Beach, HEAR, and here's the stock. This is, let's see, a few years ago, but this is a perfect high tight flag. So I'm going to show you another one here, and you can probably see it. So if we look at the price action, what did this thing do? It ran up 625% in just over a month. Okay, so that's your flagpole. Okay, and let me make this a weekly chart. Actually, it'd be easier to see. Okay, so this was our big run up over here on the right side of the chart. And then what do we get? These are weekly candles once again. All right, so weekly candles. So once we got that, what do we see? We saw about like that there, right? So we had 1, 2, 3, and then the fourth week it broke out from that high. Remember, that's what we're looking for, 3 to 5 weeks of that consolidation zone. So your entry to buy here, the high of this candle is 2036. So if I was placing this trade at that time, my line of the sand, this is where I would have been buying at 20, call it 2040. I'm just going to throw all this out there on the chart so you can see it. And then where would your stop be on this one? You're buying the thing at 20. Again, try to forget that this right side of the chart exists. Okay, this is what you were looking at the time. This is what you saw. You're saying, man, this thing was a $2 stock, 2 months ago. Now it's $20. You have to be an idiot to buy it here, but you're buying it anyway. Your stop would be what? Just below these little swing lows here. So I would either put it right here around 16 and a quarter, or if you want to be a little more generous, back here below this one at 14.75. So you put your stop down here. I'm just going to color this out so you can visualize this a little bit better. And obviously, it's easy in hindsight, to go back. So I would have done it right here, right? Everybody's a genius and look at an old chart. That's why I want to show you what I'm taking right now as I'm taking. But this is how you traded that one. So you'd be risking, $5 a share on this thing. And look what it did. You got in at 20. The thing ran up to $35. So you still had a really solid move of about 70% over the next, call it 2 to 3 months there before this one kind of ran out of gas and started to roll over. So, and if you think this is a new thing, it's not. This chart pattern has worked for over 100 years. I found some old examples online. This is one of Syntax. I don't think this company exists anymore, but take a look at this old high and tight pattern. Again, this is a weekly chart. So we're seeing the very same thing. Look at this as it graduates up, makes a big move of at least 100% over this 4 or 5 week period here. You got 1, 2, 3, 4, 5 week consolidation, breaks through right in here at around $32. And then over the next, 6 months, the stock continued to go 400 or 500% further. And that's 1963. We can go further. We can go. Look at this. 1915 Bethlehem Steel. Ask your great grandfather about this stock. Same idea. Again, this is logarithmic scale. Look at the numbers over here, so it doesn't look as extreme as it really is. But high tight flag. 1, 2, 3, 4, 5, 6 weeks up from 60 to 140, so over 100%. And we had 1, 2, 3, 4, 5, 6, 7 right in there weeks. It breaks through around $150 mark, and then the thing's at $600. So. The stock went 4x over the next 5 to 6 months there. So this pattern is fairly timeless. It has worked for a very long time, and it's not going to stop working anytime soon because the idea behind it is sound. The idea is, yes, it's had a big move. Yes, it happened on large volume. But as long as folks are not selling, as long as there's no supply coming, that's usually a good sign that we could see a second surge higher. You can see them in this one. It's kind of a small position, up around $380 so far the first day. We'll see what happens with Lending Club, but I'm hoping for a nice, solid move higher. So that is the high tight flag. Again, this is Ross Givens from Traders Agency. Invest well, and I'll see you in the next video.
Hey guys, if you enjoyed this video and you want to stay up to date to my weekly content, go ahead and subscribe to this channel, TradersAgency.com. If you want to be notified every time I post a video, go ahead and click on that bell down below. If you want even more information, don't forget to visit my website at TradersAgency.com and subscribe to my free weekly newsletter where I send out my research on market opportunities. Thank you for the opportunity. Have a wonderful day.